In this video, I'm going to teach you what is the 1 and 2% rule, so as the 70% rule. If you're trying to analyze deals in real estate, I'm sure you have heard about these before. And if you're new to this channel, my name is Omar Mohammed. I'm a real estate investor and I'm a coach and a mentor that help new investors get started in real estate even if they have no money. So let's get started. What is the 1 to 2% rule? The 1 and 2% rule is a rule that really helps you calculate if this property is going to cash flow or not. So how does that work? It says that, so this works if that, let's say as an example, you have a house that is worth $100,000, and if it were rent anywhere from 1 to 2% rule, it most likely it will cash flow. So if it's worth $100,000 and it will rent for 1,500, 1.5%, it will cash flow. Now, the more it goes up towards the 2%, the more cash flow it brings in. The less it goes down, the more it goes towards the one, the lower cash flow is. Now, if it's gonna rent for $800 and you're all in and it's worth 100,000, that's 0.8. That is not 1%. It most likely will not cash flow. So I personally would not purchase it if I'm after cash flow. But if it rents for 1,800, which 1.8%, that means there's more cash flow coming in. So if you're analyzing deals out there for cash flow, make sure you follow the 1 to 2% rule. Because if it's higher than that, it's great. Now it is harder to find nowadays deals that go to 2 or above 2%, but they are existing and they're out there. And if you find deals like that, they're great to keep them or wholesale them, because a lot of people will go for them. So if you want to find something, if you're wholesaling and you want to find something somebody will take, and people who after buy and hold or cash flow, this is a big number for them. Now, the 70% rule, that also works for wholesaling, flipping, or if you're trying to BRRRR. Now, what is BRRRR is you buy, you rehab, you rent, you refinance, and you repeat. So you get your money back. And of course, wholesaling and flipping, a lot of you guys know what that means. So, well, how's the 70% work? The 70% is that you want to be all in after buying the house and fixing it up. You want to be all in within 70% of the purchase of the after repair value of the value of the house. So if the house is worth 100,000, again, every house is worth 100,000 in real estate when you're giving example. So if it's worth $100,000, you want to be 70,000 all in. So, and this is how you run your numbers, because the market will always tell you, you can look at comps and you can see what would it be worth once it's done. Once you know that number, you work backwards. So it's going to be worth 100. I know that I need to fix it for 50K. I cannot buy it for anything more than 20. And if you're a wholesaler, you want to make 5K, you buy it for 15 so you can make 5K. This is exactly how the numbers work. So you want to be all in within 70. And the reason is flippers or anybody who's looking to BRRRR knows that to make any profit, now for a flipper knows if they want to make a profit, they want to be all in within 70%, because they have holding costs, they have closing costs that they're probably going to have to pay twice, you know, the first time they buy it, and then some of it they pay transfer tax when they sell it. If they have a real estate agent, they will get a fee as well, and then all the taxes and everything. So they want to make sure they make some money. We don't just fix houses to not make money, right? So that's why it's very, very important. If you're looking into a deal and you're analyzing numbers, you're keeping in mind these rules. These are two of the most important rules. Now, if you're trying to BRRRR, which is you buy a house, and this is I did this myself personally. I look for the 70%, so as the 1 and 2%, because I'll buy a house, I'll fix it up, and then I would go to the bank and I would refinance. Now, the bank will give you anywhere from, 65 to, close to 75, but I would say 70%. The bank will give you 70% of the value of the property. So once I fix it up and it's worth more, I know that they're going to give me 70. So I want to make sure I do not spend more than the 70, or that's leaving money outside. I want to collect all my money back, or if in my case I was borrowing all the money, I want to make sure I bring it all back. So if I borrowed 20,000 again to buy it, and I spent 50 to fix it, and it's worth 100, and the bank gives me 70, I make sure that I can return all the money and I got the house for free. or if I put my money, I got my money back. That's why this is how, if you're a wholesaler or if you're looking out to find deals, you gotta think like investor think, right? Because this is who is gonna buy from you, and you're gonna want to make sure you understand what they're looking for so you can go out there and get it. So as if you're new and you're trying to get into real estate and you don't have money, this is what the bank is gonna give you. So you gotta know how you run your numbers, and then they will also look if it's cash flowing or not. So if you make sure that you property checks the 1 to 2% rule, so as the 70% rule, you have a really good deal out there. Now, make sure you leave me in the comments if you have any other percentage or any other ways to analyze properties. And if you enjoyed this, make sure you follow and subscribe to get more videos like that. See you all later. Ciao.